All right, good morning, everyone. I'm gonna get started. Okay, S&P obviously had a really weak opening yesterday. We rallied back to almost flat line. I think we were down about 2.5 points on the S&P at one point, and then we managed to kind of really drop off hard, closing down about 1%, almost 17 points. You can see on the right there, every sector was down across the board. And I think really, if you have a close look, we're seeing that they talk about the Great Rotation, and I think they totally missed the Great Rotation in terms of watching that happen in the U.S. and more. What's happened is there's been a global rotation from emerging market bonds, which have just been obliterated. And obviously because of that, you've seen an exodus and a big weakening in some of the currencies. A lot of the stocks have also been hit because they're starting to see a shift in yields in some of the major markets against the emerging markets. So really important what we're watching here. I think we need to really start monitoring the South African bonds and some of the other emerging market bonds very closely. I think those are going to be those are probably one of our biggest leading indicators, along with the yen at the moment. And we'll kind of keep you in touch with that going forward. But that's kind of the reason why I think this our local market and some of the other markets have been hit to such extremes. All right, you can see there Asia pretty much down across the board. In fact, everywhere really down. I think if I'm not mistaken, China is still closed as of this morning. But obviously the commodity markets and specifically some of those, there's a lot of the stocks that are dependent on China have been hit really hard. Combine that with kind of some of the currency effects, and it's just really been ugly. So between emerging markets and Asia, things have been under a lot of pressure lately. Industrial metals producers also under pressure. And anyway, I just think that for us to see a turnaround, we're going to need to start to see a stabilization in the yen. We're going to need to start to see a stabilization in some of the emerging market currencies, emerging market bonds, etc. So we'll keep a close eye on that going forward. All right, Aspen this morning was raised to buy versus neutral at Bank of America Merrill Lynch. That one I think is important just because it's coming out of B of A Merrill. They've just been moving the hell out of markets lately. Anytime somebody comes with anything, it just really moves markets. I think they're kind of their analytical team's kind of been looked at as being the best as of recently. And then Bidvest was cut to underweight versus neutral at HSBC with a target price of 235 Rand, which I think is a touch higher than where it closed yesterday. And then Lonma is going to be served with a 48-hour strike notice, according to the AMCU General Secretary, and Lawman saying that it is yet to receive the notice. So obviously the drama continues to go on there. We'll keep a close eye on that one as well. All right, market data out today. We had some numbers out of Japan. Machine orders was a miss there. We have CPI numbers pretty much across Europe. That's coming between 8 and 10, between, some of them are out already, and we've still got Spain and Italy to come. The UK unemployment rate is going to be out later. We've got industrial production in Europe and retail sales here locally. And then, like I said earlier, China, Hong Kong still closed. All right, let's jump into the maps. Okay, the first thing I want to have a look at is the Aussie. Just having a look at this one. Obviously, we've been looking at this quite often. When we really broke down, we came in here and tested. I mean, this line was so defined. When we broke down, we came right back up and tested this level on a closing basis. We actually popped through kind of for the whole day. The one day couldn't manage to close above 36,500 the day before yesterday, and then we just totally broke down. I think really just having a close look at that this morning. The level that I see as really being our first major line of support is kind of here at the bottom of this inverse head and shoulder pattern where we broke out from, and also the bottom, the pullback in February. That level is coming in at right around 34,700. So we're going to watch that level really closely. It's really just not very far from here. We're only 500 points away from that, and we've got to remember that there's an incredible amount of negative gamma that's around 35,000. We know is really the biggest strike level I think that's out there. So, I think every tick down that the market has, the more and more selling that has to come. So just keep that in mind. Markets could remain under pressure for the next few sessions, at least until closeout. All right. This is spot gold. I'm going to take this off of a closing basis and just show here. I'll zoom in a little bit. But we can really see is yesterday we actually came down and tested. We wicked down to support on this ascending trend line here. At about 13, call it 1368. I think if we get a close below 1368, in my mind, this thing can really have a proper washout. And I'm waiting for this thing to totally break down because, with what's going on with bond prices globally, especially main one being in the U.S. and the fact that it's priced in dollars, this thing can really start to get ugly quite quickly. I mean, I think the cost of whole gold is going up on a daily basis, the opportunity cost. So I think it's something we've got to pay attention to. This could get really ugly. Obviously, we'll probably have a flow through into some of our local shares. So just watch that one very closely. If we drop about, I'd like to see it at 1365, then that's about when I'll become a seller. All right. MediClinic. I'm going to shorten this up a little bit. Obviously, this thing's had a hell of a run, down from $36 at the beginning of the year. We traded all the way up to 72. It's a 100% gain in a year. We're really kind of coming in, testing kind of major support around here at 64, and I think I would say that we maybe even have closed below this level a little bit. Sorry, just drew a bad line there. I would say that we've even kind of closed below that. So in fact, I would probably feel more comfortable drawing the line up here to where we wicked down to a few sessions ago. So we've really broken major support on MediClinic. If we look out longer on trendline support, let's just have a quick look and see where that kind of lands us up. We really have broken that as well as of yesterday. So, and those two lines were intersecting quite nicely. So, really wouldn't be surprised to see even more of a correction out of MediClinic. When you zoom it in a little bit here, you can see that it does. It was looking a little bit head and shoulder-ish. Oh, sorry, I just zoomed in too far there. What's that? Yeah, they also got ex-div on Friday, but you can see here also looking a little bit head and shoulder-ish, and we've broken the support there. So MediClinic really has quite badly dropped support here into a head and shoulder pattern. I would say the target would be at least 60.5. So just watch that thing going forward. Could be some more downside there in MediClinic. All right, Naspers. I wanted to show Naspers just to show kind of where I think support is. It's starting to. There's two lines on a closing basis. I think where we closed yesterday at 699 is support, and then on a intraday basis, I think if it drops 690. Then I think, 690.5. Then I think we could see a retest or retrace all the way down here to 640. I've kind of been really hoping that it gets down there after yesterday's trading statement. Yeah, you wouldn't think so, especially combining that with a really weak rand. But it's something to watch really closely going forward. This 700 level is actually quite big. I think if we drop that on a closing basis, we could see us trade all the way down to close to 640. All right, Exaro, we talked about this one a little bit previous sessions. I mean, this little rising wedge that we've made out of this kind of steep downtrend here is really telling. But we dropped that yesterday. I wouldn't be surprised to see these things trade back down to recent lows. We looked like we had a little bit of an inverse head and shoulder pattern here. So I would just be careful maybe until we potentially drop this 145 level. But I think if we drop from 145, then I really think we can trade all the way back down to the lows, which is still another 10 rand lower. So still some meat left on that bone in Exaro. All right. Woolworths, I think a lot of people have been caught in this stock in particular. Really kind of coming up on a bit of I don't know if I would say major support, but some sort of support right here, somewhere in here, the last time we really had a big dip was in the end of January. We're really coming down to test really hard, and what I'd like to show you guys as well, and what's quite incredible is that we are, if I'm not mistaken, about 15% away from the 20-day moving average. So, I mean, that's an incredible number. You can see here how how rarely it gets this far away from its 20-day moving average. I mean, if we jump back into a little bit older chart, you can see it really sticks with it pretty much the entire time. You had this one big downdraft here back in the beginning part of the year, which we took about maybe close to the same distance away from its 20-day, and then it quickly started to regain some of the losses from there. So I think we're probably getting to quite close to a very oversold point here in Woolies, and a point in which we can maybe have a buy. So just watch that one closely. It is obviously quite heavily oversold. All right, Impalas. Let me just take this away. All right, Impalas, I'll shorten it up a touch. You can see here we're really trading up on this slight little ascending trend line that we've made here. I mean, I guess if you draw it to the wicks, then we're getting very close to dropping support, which is right at more or less where we closed yesterday. So either way you look at it, if you want to draw from the closes or draw from the wicks, Impalas is starting to look very shaky here on a closing basis. I think it kind of has broken down a little bit there. Could see a little bit more downside. This thing has been one of the stronger trading ones on the board, though, so I would be a little bit careful there. And just sticking with the commodity theme, I'll just show bulletins in London real quick. We tweeted this one out yesterday. It managed to have a huge freaking bounce at the end of the day in London. You can see there we managed to really regain on a closing basis what was kind of our breakdown here. And this really all happened kind of in the last 45 minutes or so. So we traded all the way down to 1730. We managed to close all the way up at 1778 in Billiton. So it's a very important hold. I think if this thing drops on a closing basis, I really think we've got to look for more downside on on some of these mining stocks, because they're all kind of starting to fall apart now. And that's it for today, guys. Thanks a lot.